Good afternoon, welcome to GrainTV. It's August 21st, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a relatively quiet but positive day for grains in Chicago. Jumping into the quotes here, you see corn up 1.25 pennies on the December contract. We had soybeans up marginally, up just half a cent there. Chicago wheat moving higher today, up 5 3/4. Cody, let's talk a little bit about export sales here first. Very good sales this morning reported in terms of new crop corn and soybeans. We saw 719,000 metric tons sold for new crop corn, 1.42 million metric tons sold for beans. Both those numbers well above trade expectations, so that seemed to support the new crop contracts today. One thing, though, catching some attention was some cancellations for 2013-14 soybeans. That's something a lot of traders have been talking about and really expecting here for the last couple months, but we still continue to see positive sales numbers until today.
Absolutely. We had cancellations here about 87,000 metric tons. And the bottom line is we've been running at a very hot pace here in terms of sales, and it's required the USDA to revise their export sales higher here. We saw that in the August report, right, when they moved exports about 20 million bushels higher here. One thing, take a look at this slide. This is our model. What you're seeing in the blue lines, this is a histogram model. The blue lines showing actual sales. The red line is what we would expect to see around this time of the year. And the green line, which corresponds to the right axis here, shows you the number of bushels ahead or behind pace to meet USDA expectations. You can see that even with these cancellations, we are still about 37 million bushels ahead of pace to meet USDA expectations. We have only 2 weeks left here. I would expect to see some more cancellations. It just depends on how much here. Yep. It's likely, though, that we will finish off just a bit ahead USDA expectations from their August report.
Yeah, it's going to be very interesting to see what we get in September. That report's going to be out September 11th, and as you said, Cody, as it appears now, USDA may need to make a revision higher there in terms of those old crop soybean sales. As we know, is day 4 here of the Pro Farmer Crop Tour, and today crop scouts were out in northern Iowa and southern Minnesota. And today, looking at Twitter, looking at other social media platforms, the quality of the crop in photos that we were seeing was actually a little bit below what I think a lot of traders were expecting today. As you can see from this this tweet here that we saw come across the news wires about midday, this is just highlighting a crop there a field in southern Minnesota that is well behind where it normally should be in terms of maturity right now. That's the result of most likely late planting and a relatively light year in terms of growing degree days. So, the author of this tweet speculated it's going to get harvested around Christmas. That may be a little bit much, but I think this tweet does a great job highlighting a crop in the area that isn't that well developed right now in terms of maturity, and that's going to become more of a factor here, I think, for the trade as we move toward harvest.
Absolutely, and you know what? This tweet really reminds me of the web meeting that we had back on August 5th when Planalytics really did a great job kind of forecasting this, kind of talking about how far this crop is along at the crop reporting district level. Now, they have a platform there where they look at the crop reporting district and they look at the 90-day, the 105, and the 120-day varieties here. They compare that with the first freeze. Right now, Planalytics, they're looking for a more normal first freeze here, but what you can see is that southeast Minnesota and southeast North Dakota both are these crop reporting districts where we may not see maturity reach before the first freeze, particularly for the 105 and 120 day. Yeah. The 90 day may be able to get in there. You may be able to reach black layer here before the first freeze, but it definitely opens the door for some crop damage, some yield damage in those regions. Now, of course, this isn't something that we see widespread across the U.S. or across today's reporting districts, but of course they did go through Minnesota and they saw really what Planalytics highlighted back on August 5th. Right. Just so you know, folks, you can see that web meeting here. If you go to grainhedge.com, you can look on that special presentation on the right side of the web. Yeah,
absolutely, Cody. To wrap up the show here, let's change the basis a little bit. Let's take a look at what we're seeing right now in the old crop cash market for soybeans. A lot of volatility right now. Really, as we're seeing the convergence between the very, very tight old crop situation and the what looks to be quite abundant new crop situation in terms of soybeans. As you can see here, this chart at the forefront of the screen shows the average soy plant basis versus the November soybean contract. And you can see here that during June and during July, we started to see basis move back a little bit. But in the last several days, it has ramped up really quite dramatically. You can see here the screenshot right behind it shows that there's a process processor in Claypool, Indiana right now bidding $400 over the November contract for spot delivered soybeans. Really highlights, as I said, a market that is trying to deal with these convergence issues, and right now it really looks like it's playing out in the new crop future spreads as well when we're looking at that September versus that November contract.
Absolutely, yeah. We're seeing a very big squeeze here where we're seeing real strong bull spreading, buying that near-term, selling the deferreds, and the spread here is just really rocketed higher from 15 cents just really a week or so ago to about 95 cents today. So we are seeing that displayed here in the basis. Of course, when we calculated the basis, that previous chart here, the previous slide, that was actually calculating basis spot cash price off of the November. So this spread is baked into that a little bit, and what you can see here is the spread is just exploding here, shooting higher, showing just how short we are old crop soybean stocks, just how much it's needed by these end users like the soy plants.
Yeah, absolutely. If you're a spread trader yourself and you want to take a look at some of these charts that we use on GrainTV, we have a great trading platform here in the office that allows you to view these spreads, to trade them as true spreads, and also look at some spread matrices if you are a grain merchandiser out there and really wants to get a good handle on what the spread environment's looking like for corn, soybeans, and wheat. So if you're interested in taking a look at that, feel free to visit us at grainhedge.com and take a demo, or as always, you can call the office here. Numbers 877-472-4607. Thanks a lot for joining us here on Thursday. We'll see you back here tomorrow.